All right. Good morning, everybody. Comment allez-vous? It's not a Monday. It's a Tuesday. What is it, the 4th? The 4th of something, I think. Yeah, September 4th. Hang on, let me bring up the chat. Takes a second for me to bring it up on YouTube. There we go. So, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Very nice to see you. So we have a short week. Yesterday was a holiday in the United States of America. It was Union Day. Union Worker Day. Cool. And then on the other end, the other bookend is going to be non-farm payrolls on Friday. But we got some other stuff going on in the world. In fact, we will go through the calendar. Anyways, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for hanging with me today on YouTube, on the Forex.Today YouTube, on the YouTube channel. I've been trading currencies for, well, I don't know, about 15 years, maybe more, I guess more. Coming up to, my 150th month of of doing webinars at FX Street. No, actually that's not true. 150th month of one of the webinars I've been doing at FX Street for, so anyways, that's almost 13 years, just that one webinar. So I guess I've been trading currencies for a while now. Wow, that's amazing. So anyways, I'm here to share my everything I've learned really with you, with the overriding goal of helping you become a success sooner than later. And it's a symbiotic relationship between you and FX Street. Sorry, but you and Traders Way. I got too many things going on in my brain today. Traders Way wants you to succeed, and you ask yourself, well, why would some other organization want me to succeed? Well, it is a symbiotic relationship. The more you succeed, the more you're going to trade. The more you trade, the more opportunity Traders Way can offer you services. There are fees attached to that. They are competitive. Competitive fees, fast execution speed, which is super important, world-class customer service, good-looking analysts. So anyways, I think that's important. You should at least trust the broker you're with, and if you don't, leave. Find a broker you are proud to be with. So hopefully I can earn your loyalty and respect and contribute somehow to your success through these webinars together every day. Just reading comments, blah, blah, blah. Yeah, cool, right on. So let's move forward here. Just quickly go through the calendar. This is available at Forex.Today. We have ISM coming out at 10 o'clock today. This, and we're in PMI week as well. So, you know how I get all cranky during PMI week. Then we got Aussie GDP coming out. Obviously, that's going to be a great opportunity for Skippy Scalpy. Okay. It's going to be a great event. So that's this evening for moi. I don't think GDP out of Australia moves the market that much, but why not? Sometimes this time of year, people are just looking for anything, any reason to get going. Remember, think of it from this way, like a hedge fund trader or a bank trader. They're now that they're coming back from summer holidays, they're very, very, very motivated to hit their year-end goals so that they can get their year-end bonus. So they're looking for reasons to trade. Aussie GDP, boom, good enough. Let's roll right? And they're going to throw down some bets on that. La 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 la. PMI out of Europe. Okay. All right. Spanish, German, Eurozone. Great. Lot going on in pound. In fact, I want to go back here. It's not on the calendar, but I believe Carney is speaking soon. In an hour, less than an hour. Carney is what? Is it testimony or is it a speech? Or I don't know. There's speculation about him renewing for another term. So anyways, there's something going on in there that could affect the pound. Okay, moving on to Wednesday. It's pretty light in the European session. And then lots of CAD news. Boom, 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 including interest rate decision. So think of that. So tomorrow, CAD's going to move. Tonight, Aussie's going to move. So these commodity currencies are likely to move. Okay. Import-export data out of Australia. You know, this trade balance is super important, especially to an exporting country, right? Because we are trying to discern the health of global macroeconomics. And if things are good, Australia should be exporting more than it imports. Okay? That's kind of what you want, right? So we'll see. We've got to keep an eye on it, and that's why this data is released. Another dumb prediction. This week it's on Thursday. ADP is on Thursday because of the holiday on Monday. So that can often provide a scalping opportunity, right? ISM services then at 10 o'clock, which is another great opportunity to scalp. So put down on your calendar that Thursday, September 6, 2018, will be a good day to scalp the US dollar. I'd start looking at it about 7:30. You should be good all day. And then Friday, well, we know non-farm payrolls, right? So is there anything else going on? Well, Eurozone GDP. All right, that's going to be a good one. Then non-farm payrolls, right? Then, what? Canadian jobs report. And then what? IVPMI. Holy smokes, right? So CAD is definitely going to move again. So CAD's going to be a good trading currency this week, right? So we got Wednesday, CAD's going to move. Friday's CAD's going to move. And then over the weekend, lots of Chinese data, right? And that should move the Australian dollar. So these commodity currencies are going to move this week. Okay, commodity currencies are going to move this week. Okay. So with that, let's start with gold and oil. Oil is Oscar Mike. And, well, I'll start here first, and let's see if I can keep my brain on this. I totally clicked the wrong one. That's not what I wanted. There we go. I want to show this. Okay. This goes back to our original target from 2 or 3 weeks ago. Right? It's this first one. Forget the down arrows that I don't even remember what that conversation was about. This is all up from this bottom to this resistance zone. And we're coming in on $71 a barrel. Okay. All pretty decently straightforward, according to plan. Okay. You can see there's even a swing on this. Everything's pretty good. But I want to now bring up the energy complex. Oops, let me get that over there. Okay. I want to bring up the energy complex. I wanted to show you Brent. Okay. Does Brent have resistance? Seems like it. All right. And then let me zoom in here. Uh, 80 is right there. Psychological level of 80 is right there. The weekly projected high we've almost hit already, which then sets up a counter trend, right? So we're at resistance in a scenario of counter trend near a major psychological level. You'll say, well, Wayne, I don't trade Brent. Okay, but we also know that there is some sort of correlated relationship between North Sea oil and West Texas oil, right? So I just thought that was interesting. Probably not a good place to buy. Also, on sort of the more fundamental economic soft side of this, I believe Saudi Arabia has upped their production to cover possible, Iran. How do you say it? Not shortages, but loss of production from Iran. Okay. So that's that. Let's do some gold. Okay. Gold coming down should predict dollar going up. Okay. If you're a bull on gold, the monthly buy zone is in here. So I wouldn't get too upset that it's fallen if you're a bull. Okay. I don't really see anything else to talk about on this for today. On Monday, if you were a buyer, you would have bought it here. If you were a seller, you would have sold it there. And that's just playing out. So it's like, if you did your job, bears broke even. Sorry, bulls broke even. Bears are profitable, but not much. And not really much to add to that. Okay. Here's our break that we set up. I guess it was Friday. Let's see if I can get back in there. That's one too many clicks. Click out maybe. Okay. In this situation, what we wanted was up, down, and up. And it just went up. Sorry. Yeah. Well, okay. Great. We still need sort of a retracement extension if you're a bull. Okay. And obviously don't forget the old levels of resistance, even though we're kind of, looks like we're breached through it now. If you're a bear, you want Canadian dollar to gain value, and you want the US dollar to lose value, so you want this thing to fall. Look at this cluster. Okay, monthly R, right? Monthly R1, weekly R2. We're kind of getting into that zone, which means it's overbought. In this scenario, you would think it would come down, but after that move, I wouldn't think it would come down for that long. So If I was a bear, you might want to look at that. Even if you're a bull, you even want to look at that. And then I think you're going to have, something like that. Does that make sense? So I think what I'd end up doing, since that didn't look like it was too important, I'd play that. Oh, yearly M3, Brooke. Okay. Yeah, didn't know that. Muchas gracias. Muy bien. Oops. This is too important to leave. Yeah, I'll just leave that. Yeah, I'll just leave that. Maybe we can get rid of this. That was the double bottom before the rise, but anyways. Okay. Just backing out here, taking a look at the long run. Oh, that's pretty funny. It's quite beautiful, huh? Now let me remind you that the Canadian dollar used to be worth a pretty decent amount more than the US dollar. Check that out. 90 cents. The Canadian dollar was worth $1.10 US. Okay, and you'll say, well, 130, 131. Well, when I was a kid in Canada, it was like $2. Canadian dollar was like 50 cents. Oh, peso. Okay. And what do you think this was related to? Obviously, the trade negotiations, right? So, yeah, no real flow trade. Okay. And a major fundamental event like that, and there's the last day. A major fundamental event is obviously going to be the type of thing that gets in the way, right? Now, would I have known that ahead of time? No, of course not. Would I have looked for the flow trade? Yeah, sure. Okay. Okay. And now, of course, you have to think about it too. It's going to be more impactful in situations where the US dollar is weak anyways. Right? Like 2.6 billion is not going to be enough to like change the value of the US dollar. But if the dollar's already weak, right, it's going to have much more of an effect. Yeah, well, yeah. So it's not that there's promise, right? It's that I know for a fact it works when the market conditions are right. Now, when the dollar is on a rampage anyways, forget about it. Just there's no way you're going to overrun the reserve currency, right? So just chalk it up to that. Okay, going back. Oh, and by the way, since it's like the 4th, I'd pretty much say this trade is over. Yeah. So I just walk away, check it out, check in on it next month. La 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 la. More dollar strength. Okay. So this goes back to the end of August. So when was that, Thursday or something? I mean, look at how hardcore this resistance was. Okay. Now, do you think because I drew a circle around this and a gray zone around this and an orange line on this, do you think that was important to this drop? Not that I drew it, but obviously there was something for there that was predictably resistance, right? Right? So again, you don't know if this market, like any market, is going to go up or down, but you can identify support and resistance. Okay, we clearly had a level of resistance here using price action. There's market resistance using pivot points, so on and so forth. And again, just go back to watch those old videos. And it turned out it is actually quite important. Now, we also then have this predicted to drop into this area where we are now and maybe go up if you're a bull. So if you're a bull, now we need a new trade plan. Bulls buy at support, so we have to identify support. Okay. On a monthly basis, way down here is interesting, but it creates a lower low, and I don't want that. So I want it to go up on the monthly resistance that's closer. That is here. So we just touched, not monthly resistance, monthly support. So we just hit monthly support, okay? There's some big weekly support down here as well. We're on weekly support 1, I guess, if that's important, you can have that. And then in here, there's something going on, right? So I agree with what, I agree with what we did. This had to be about the beginning of last week, right? This is probably last Tuesday we did this. So 1 week ago we said, hey, heads up, this is where this is where bulls are going to take profit. It's not that this drop is bears selling. I mean, it could be, especially this here, but it could definitely be bulls taking profit. So if the bulls are going to buy it back, this would be a great spot, either here or just a little dip below. So we'll call that, just for fun, we'll call that a double bottom. Okay. Okay. Any questions about that? Okay. Have you thought about being a bear? Well, the bears have had 2 opportunities already. One was last week. Then yesterday, this opened out of position. So you're supposed to sell the 4-hour 21, which was here. So it's like you can't sell it here. You can have it rise up to this M2. So what do we want to call that? 116. You could sell a retracement to 116, which would look something like that, and then drop. Okay. Is that what you're doing, Frankie? The flow trade. This is euro dollar. What blow trade? Well, the dollar, it's one of these interesting things. It's still a high yield, and it's still a place of safekeeping, right? But if global macroeconomics are improving, I think eventually the dollar should or is supposed to or needs to, how about that? Needs to weaken. Okay. Okay. But just don't be bullheaded. It's okay to be a bull. Just don't be bullheaded. Don't force anything. You know, and this is where having a long-term view of your trading career is very important. That you don't feel rushed to make a ton of money quick. You don't want to start selling dollar when the dollar's strong. Okay, I'd rather you be buying dips of the euro dollar going up than buying drops of the euro dollar and hoping it goes up. Okay. Yeah, John says for the sake of emerging markets. Yeah. So that's the flip side. Like we haven't had the macroeconomic recovery that many people have been hoping for. And if you go back to my webinars, even 5 years ago, I was really making a stink about, saving Europe. That even China shouldn't, stimulate their own economy. They should stimulate the European economy. And that for us to save China, that we need to save Europe. And then once China is saved, right? So you save Europe. That'll save China. And then with China saved, Canada and Australia will benefit, and other exporting nations, right? And so on and so forth. And Europe has been economically incapable of solving their problems, right? So that how you say in English, that delayed the inevitable recovery. Also, the timing of, you remember how slow the Europeans were to fix, right? The first European response had to do with austerity. Somehow they thought with 20% unemployment, it would be a good idea to raise taxes and cut benefits. They thought that was a good idea. Now, these are highly educated people, right? Okay, I would disagree with their approach. In fact, I don't even understand it, but maybe it's just I've received a one-way education from Harvard or something. Okay, so that was their response. Then 2 or 3 years goes by and they're like, holy crap, the United States is already recovering and we're in worse case. we're even worse off. So then they're like, okay, I guess we'll do this whole quantitative easing thing. It seems to be working in the United States. So they do that to create inflation, right? Then what happened? Oil collapsed, dropped from $110 a barrel to $30 a barrel. So now Europe, because it was 2 or 3 years late, decided to do what everyone else seems to be doing. And they copied the U.S. approach late, of course, which means it's going to be much less effective because the world had changed. And so they spent all these trillions of euros to create inflation, and then oil dropped by 70%, which means, no inflation. So they spent all that money and didn't get inflation? Now, to be fair, the United States did a better job. Thank you, Ben Bernanke. And I do thank him, by the way. He did a great job. I was there every single day. since he was Fed chair. I think he did an amazing job. I think some of the things didn't work, but I think he was out there trying to make things work. But anyways, here we are. One of the big conundrums that the United States has is we don't have that much inflation either. So where do you get growth? Where do you get inflation? Well, you can do something basic like increase the size of the population, or you can really change the technology. So, you can go through, you can go through the models, you can go through all, and it can get quite complicated. I don't know if you've ever done like a solo growth model or anything, but you can really start adding layers to the onion and get yourself a very big onion, economic onion, doing something like solo growth. But what you'll find is it's really important to change the technology. And also, alpha is represented by how educated and entrepreneurial your population is. And that can also really, really stimulate growth. But we're in a situation where in the United States, do you guys know the COLA model? COLA has to do with the amount of people looking for jobs and the type of jobs that are available. And you can look at them going, this model, you can look at it, and it's plotted on a chart. So when times are bad, the chart goes this way. When times are good, the chart goes that way, and it goes back and forth, from the 1940s, 1950s, 1960s, 1970s, 1980s, 1990s, 2000s, right? And you're basically getting all these dots plotted back and forth, blah, 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 all over this chart. And then this most recent recession, what happened was it went bloop, bloop, and we're like way off the 100-year trend. And it's called the COLA model. I don't know how to spell it. I don't think it's like Coca-Cola. But anyways, when you look at it, what it tells you is the economy is recovered. Employers are looking for workers. That's the first part of the plotting. Jobs are available. They are being advertised. But the other part, now that instead of being here, we're up here, which no one's ever been, it's never been like that before. What it's telling you is the people looking for work do not match the jobs available. Okay? The coal miner from Kentucky is not getting the engineering job in the Silicon Valley. And so there's a lot of interesting things going on here, which can slow growth perhaps. And then, of course, the fact that we have an interconnected global economy now, the United States exports their inflation. So you're like, the United States has low inflation, even Europe has low inflation. So everyone's running around going, how come we don't have any inflation? And then you go to South Africa, right? By the way, South Africa, congratulations. You hit recession today. Woohoo! Official recession in South Africa. Good job. Driving that economy into the ground. It takes a lot of work. You know how many corrupt politicians it takes to drive an entire economy in the ground? One, I guess. I don't know. Argentina, ask them about inflation. Turkey, ask them about inflation. So if Europe and the United States don't have inflation, where did it go? Turkey, South Africa, Argentina. So it's been exported, which I think is a very interesting problem. So Christine Lagarde, I don't know if you're following this. She's on her way to Argentina. They need a bailout. She needs a free weekend. I have a lot of respect for Christine Lagarde. She looks like she's kick-ass. I don't know any other way of saying it. She looks classy, she looks intelligent, and she looks like she'll kick your butt. I think she walks with a big stick. I think she's cool. So she's on her way for some Argentine barbecue. So someone's going to have their head on a stick very quick. So anyways, yada, yada, yada. Back to the dollar. If you're a buyer, what do? You identify 2 levels of support which you would consider buying. I don't really want to buy it here. All of this is kind of the same to me, so I would widen this. And yeah, so if I was a buyer, that would be that. Below this level, you could still buy it here, and then of course you could buy it way down here. I just don't want it. What's BDE? Remember, it's a family show, by the way. Are any of my South African brothers and sisters here? A recession during a global recovery is very disappointing, and I think probably more disappointing to my South African brethren. Like, what are you going to do, huh? Is that really? Didn't even know. Yeah, what are you going to do? What an amazing country that is still being punished for something. So I keep thinking, I keep thinking I should make a return visit to South Africa. I know someone whose father died, and they're like, yeah, we got to dump his wine. You're like, what? What? He has wine? Yeah. He had a wine cellar. I'm like, he had a wine cellar? How many bottles does he have? And they're like, well, we're not sure. A couple thousand? I'm like, what? Wait, let me get this straight. He's got a couple of 1,000 bottles of wine, and what are you going to do with it? Like, yeah, we'll just sell it. No, I don't know. We don't know anything about it. We'll just get rid of it. Like, oh my God, don't get rid. I mean, it's got to have some wonderful wine in that cellar. Anyways, yeah. Anyways, I was thinking about returning to South Africa. I had such a good time, met so many great people. But alas, I don't have time. Yeah, by the way, guess what starts today? Here's my class at the Harvard Business School. Right, and it's like an easy guide, right? An easy introduction. But this textbook is like nuts. There's like, it's so big. These are all, it's crazy. It's, I don't know. I can't even find it. But like, the text is so small in this ginormous accounting book. But anyways, so that's my class at the Harvard Business School. And then here's 2 more. Right? Real estate development. So anyways, those are the 3 textbooks I need to start going through today. The other one's not at a business school, but it's like, I don't think it's even technically, real estate development is not even considered a finance class. I don't think. I'd have to look it up. I think it's a management class, but I'm a management grad, so I can take it, right? But to me, it is finance because it's all, creating budgets and cash flows for 30 years in advance. Because, if you're going to like develop this property A, or develop property B, which one do you do? Simple question, right? Well, you got to then do all the, pro forma cash flow statements and discount it out, and all that kind of stuff, and find out, well, this one, it will be profitable, but this one will be a little bit more profitable. So you're like, okay, I'll go with B, right? But you'd have to prove it. So to me, that's finance, right? If you're looking at the flow of cash over time, cash flow, then that would be finance. So to me, it's a finance class, but very interesting. Okay. Well, John, just one caution to that, to commenting on John's, if Trump says this, the dollar does that. Just remember, it's counterintuitive. A weak dollar is good. When our economy is booming and Americans are rich and the global machine is well oiled and functioning properly, the U.S. dollar is weak. So dollar strength, bad, right? Dollar weakness, good. Now, not all currencies are like that, but this currency definitely is. So if Trump tweets something and you see the dollar weaken, it's actually a good thing. That means that's good for business, and dollars are going to flood into the global system. And when the dollar floods the interbanking system, it weakens. Hence, right, okay. I need to just make sure, right? Hey, and by the way, guys, I know I babbled on a little bit there, but can you throw down a like or a thumbs up or whatever that is? I appreciate that if you're enjoying the webinar. It's important to YouTube. Okay, so, and then I'll just keep moving. So there's oil and gold. Go on to the Aussie here. Okay, let's get into this. We'll do the yens now. All right, so let me expand this out. So last week we said if you were a bull, you'd be buying around this gray zone. Okay. I have to adjust it a little bit. I don't know what we were talking about here, but this is clearly the plan. Okay. All right. If you're a bull, you'd be buying off the support. By the way, this is a beautiful price. Just around below 80 is perfect. Okay, if we're going up here. Now, we had a very significant drop, though, right? We were way up here, and then it collapsed. So, if this has turned you bearish, or of course, you were a bear, your first level to sell is way up here on a monthly basis anyways, right? On a weekly basis, this was your first level to sell. But I like this better because it's a cluster of your weekly sell zone and your monthly sell zone. This would be a perfect sell. That would be gorgeous. Okay, so down here is truly a wonderful buy zone, mostly because there isn't anything else. If it doesn't go up here, I don't know, I'd take a walk or something, take a week off. And if I was a bear, I would sell hard way up here. This is just gorgeous, just below 81, right? Buy just below 80, sell just below 81. Both are just fantastic. Okay, and of course this 80-50 or 80-40 level, that's good too on a weekly basis, but I'm really hoping for more. Okay. 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 Piggy's gone. Okay. It opened out a position on Monday, sold off the 4 hour. Ooh, it wasn't a 4 hour. Hang on. Didn't make it even back to there. So just gone. Big move here. I think there was a report over the weekend that Brexit has already cost the UK a very, very, very significant amount of money. That their GDP is dropped by like 2%. So it's just very, very bad news. Now there could be a rumor going on, but by the way, is Carney speaking right now? Yeah, I think Carney's speech just started right now. So that might make this move a little bit. But, you know, I wonder if the UK wants a weak pound. Okay. One thing that the swing trading group and I talked about last Friday, I guess it was this possibility here. If you're a bear and if you sold high, your target is way down here. I can't even see that, but let's just call it $1.25. Okay. Is that amazing? Do you guys remember the pound at like 220? I do. Or whatever, 2 something. I thought it was even worse than that. This doesn't have any more on it. Quite amazing, this big move. Absolutely amazing. Remember one year, a long time ago. I'm trying to think how long ago. I'm thinking like 13 or 14 years ago. I went to Europe. I think I was taking my wife / girlfriend at the time, right? My girlfriend on a European vacation. So I'm like, oh, you got to go to Paris. I love Paris. We're going to go to Paris. I'll take you all around Paris. Great. And then I said, oh, while we're there, we should zip over to London. So I started doing some research, and I found Margaret Thatcher's old apartment on the Thames. And I'm in the process of making arrangements to stay there. Like, we're going to stay at Margaret Thatcher's house, right? And anyways, I start like crunching the conversion rate. And I'm like, oh, all right, it wasn't cheap to begin with. But by the time I converted the dollar to the pound, I'm like, oh, it's actually fairly expensive, right? I'm like, ooh, well, we'll cut back on food and stuff, right? We'll try not to eat out much in London. And then I started like doing things like the cab ride. Like, how long will it, how far is it from Heathrow to this apartment? And I started converting the dollar to pound again. And I'm not joking. It was something like $200 US to take a cab from the airport to this apartment in London. And I'm like, well, $200 there, $200 back, plus you're going to zip around London. So I'm like, boy, that's going to be a lot of cabs. And like, obviously you're going to have to eat out and this apartment. And I'm like, baby, we're just going to stay in Paris. Right? Because it was too expensive. too expensive to go. You know, and now look at it, we're way down here. I think it was like close to 220, or I don't even know. So this doesn't go back 13 years, does it? Oh, it goes back to 94. So this is 2005. Yeah. So we were right in here. And I looked at it, I'm like, no, we'll just do a day trip from Paris. So we stayed in Paris for a week and a half, 2 weeks. And you just couldn't go to the UK. It was stupid. Let's do some more yen pairs if you don't mind. But that's what it was like. So I was in London 2 years ago after Brexit, and I was smoking a cigar with a true British gentleman. And yeah, he didn't like the whole situation at all. I remember looking into his eyes, though, and he had no concept of like money or working. He was a true gentleman that he didn't know anybody with a real job and wasn't even interested. It's just amazing. See, in America, you're rich, but you have a job and you do stuff. But he was truly wealthy, where he was born and bred to just manage the family's concerns. All right. Okay. So we have the double bottom, up, down, down, buy, up. So we hit our target really fast here, remember? Barely even pulled back. Went up, hit our target, but notice again, it's a monthly M3. So for those in the swing trading group, really try to pay attention to how important some of these pullbacks have been. You'll notice that 2 or 3 days before the end of the month, we were hitting these key areas, and they turned out to be important, which tells me people know these prices ahead of time. So somebody looked at the high, low, and close of August, near the end of August, but not on the 1st of September, knew that this was an area to sell. They had a plan, is what I'm trying to say. Bears knew where to sell. Now, maybe it's a coincidence because of this and that, but still, even if it's not pivot points at all, the point to walk away with is like these big dramatic moves. They're not random. People had plans. Right? Somebody said, well, I'll sell here or I'll sell here as it rose. Okay? So, bears, you sell a retracement, down. Okay? Bulls, you're still in the buy zone, bulls. You don't want to get down here because it's just it's a little bit too low. Even this is your buy zone. This 142 is where you're kind of supposed to buy. If I were me, I'd want it to go up sooner than that. But there's such a cluster here that, it's like it just seems like my spidey senses would tell me that it's going to drop. So like maybe it's just easier to move this. Okay. This would be understandable. Okay. Like, where else would it go up, right? Where else? Here? 142.50? It's not that important of a weekly pivot. The monthly pivot's here, and then the weekly reversal zone is here, just about the same pivot. So why not just let it come down, and tomorrow on Wednesday we hit the bottom, and then maybe it starts heading up. Okay. Lots of things coming down. Kitty cat, that's a buy zone. Okay. bears, you can see you had your shot. Okay, a bull would want to buy it here. Anything lower is just extremely undesirable as a bull. Okay. Another way of saying it is it has to go up here, or you're just going to let it drop all the way to this double bottom. Right? Imagine like you're in a scenario where it has to go up now, or you're taking the rest of the month off if you're a bull. That's interesting, isn't it? Okay. So it has to make, so imagine to get this to go up, it's probably going to have to come up and come down and then up and down. Obviously, we got non-farm payrolls coming up. Thursday is ADP and ISM. So like the big news events for the market, well, we got the Canadian jobs report. There's something on Wednesday. So yeah, I guess this should bottom out today, kind of go up tomorrow, and then really probably go up Friday after the Canadian jobs report. Also, maybe a good NFP will weaken the yen. Okay, so you kind of have to pick your prices here. And so as a bull, I'd say I'd want to buy it here or I'd want to buy it there. And I would skip all the middle. Okay, or wait for something. If I'm waiting, and let's say it just dropped down to here, because you can see that's a good one. Let's say it came down to here, then double bottom, then made a higher high, then made a higher low. I could say, well, it didn't come down to here, but I like the reversal pattern, so I'll buy that dip. Either way, it's like I want it to go up here or I'll wait. Okay, be sure to ask questions, guys, if I say something you're not so sure. Kiwi, exact same thing. Okay. Actually, this is an interesting one, huh? This is an example of opening up out of position, maybe catching a 4-hour 21 if you're a bear. Bulls, I would do the exact same thing. Well, I guess it's not the exact same thing. It needs to go up here now if you're a bull. Or I take a walk. Right? This double bottom is not really in a meaningful place for me to get all excited about buying. I mean, maybe because it's a weekly, but then I just wouldn't be that aggressive. That's not that good for me. The next place to buy is way down there at 71. Oh, I don't want that. Okay. Cool. Right? A little more. I'd like a little more than that. So, yeah, so please go up now, Kiwi. Aussie, you can clearly say I had this marked up last week on Friday. This whole area is our buy. Similar scenario as the other pairs. I need it to go up here, or I'm really not interested anytime soon. Well, Kudzi, that would be because that would be good for global macroeconomics, and that would weaken the dollar. As I explained earlier, a weak dollar is a good thing. So if NFP is good, the dollar would weaken. Now, you might be under the argument of, well, if it's good, then the Fed's going to raise interest rates and no one else is really raising interest rates. Like, okay. Okay. So what do you think? Is this going to turn and head up? Well, you buy it as close to this gray line as possible. You put a stop. And when you drop a stop, that probably should tell you to stop watching it. Stop staring at it. Let it do its thing. But this is not a good setup, right? Like, what pattern do we call that? So this is still, right, pretty bearish. I mean, if you called that support and if you called this support, oops, didn't mean to do that, right? Then we're below all of that. And it's really not welcoming. Okay? So just always back yourself out and make sure you see the larger picture. We don't want to be down there. We want to be up here. So what we prefer to do is trade in markets that are doing this. Okay? And we're doing the opposite of that right now. So this is still quite bearish. Okay. Now, do you remember when not long ago, I don't remember, maybe 2 or 3 weeks ago, we had nat gas going up, we had Brent crude going up, and we had WTI going up. I said traditionally nat gas should have an inverse correlation to oil, and that nat gas should be falling, but someone is wrong. So anyways, looks like nat gas is going more in the traditional direction. Okay, but notice how we're hitting a projected bottom at the same time these guys are hitting their projected top. So if these come down, it's probably an opportunity to be buying some nat gas. Okay. Is anybody planning or considering specializing in the energy complex? I know you might have gotten here as a currency trader, but that doesn't mean you can't specialize and say, you know what, I want to do oil. I want to be an energy trader. I think the market moves very well. You can just really get an idea of macroeconomics and follow EIA and OPEC stuff, and I think it'd be a very easy thing to specialize in. Plus, there's jobs, right? Not only do you can work for a bank or a hedge fund, but then there's, energy companies that need energy traders. It could be a skill that you develop and then literally go get a job. They'll say, yeah, so tell us about yourself. You say, well, I've been an independent trader of the energy complex over the last 3 years. I've done very well for myself. But I'm lonely and I'd like a bigger bankroll. So if you're willing to give me $100 million to trade with, I'd be interested in your setup. Oh, John is considering it. Yeah. Yeah. You know, if you pair it though with other things, so like if you're doing that and you're trading Norway and Canada, for example, could be very interesting, right? So many banks, for example, if you're going to trade for a bank, they'll throw you into the FIC department, fixed income, commodities, and currencies, FICC. So you could say, well, I don't really trade fixed income, right? But I'm huge on the commodity and currencies. Yeah. So are you trading Norway then? Just for fun, we'll put that here. Noki, 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 can't you see? Is there any other thing besides dollar? Noki, pound Noki. Well, there's something I don't watch every day. Noki, 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 can't you see? Sometimes your trade just hypnotize me. Check that out, huh? Look at that. That's the monthly M2, pound Noki. The target would be way the heck down here. Boom. So this is, if you were trading pound Noki for whatever reason, mostly because you thought Brexit was bringing pound down and a rally in oil would increase the value of Norway, in particular Brent, right? You'd probably start looking for this type of stuff, right? That would, most likely that would be your plan. Is that right, John? Yeah. Yeah, CAD, I think would be expected. I think people would be surprised. Even, I mean, just even to hedge or something. Okay. But again, these are just plans, right, guys? You should, you know, the whole thinking ahead thing is important. So you could just be pound Noki. You could trade that. It makes logical sense. Yeah. So I'm trying to get away from USD and OK. Euro Noki maybe. Okay, and then we'll look at it. So for example, what we're trying to say, you know, I don't know, let me get off this. Let me go back to the energy complex. What we're trying to say is instead of watching these two together, oops, you would do do I want that? No, see, I don't actually want that. Let's go back to pound Noki. Okay, you would want to watch these two together. Okay. So the theory that you'd have here, when Brent crude goes up, Norway is selling Brent crude and is benefiting from the higher prices. Well, John, I haven't looked at any others, so I couldn't tell you. Okay. Doesn't look wide to me. 1078, 1079. Doesn't look like a lot. Well, again, the US dollar is its own beast. Okay? And I know the dollar is strong, and I wouldn't, if I was buying something related to Norway, I wouldn't want to buy something strong, right? So you have to start with, okay, if I was going to buy Norway, I need something to sell. You know, what would I sell? Okay, pound, I guess, right? So you just, because of Brexit, right? It's been weak for 5 years, so you're like, okay, maybe that. That's sort of the logic. But you could say, oh, well, but they're also benefiting from selling Brent. And you're like, oh, okay, well, then you could do euro, but whatever. Well, yes, I guess it's less influenced by the dollar because the dollar is going to do whatever the dollar is going to do, and there's nothing you can do about it, right? Now, if we were in a healthy global economy, the dollar should be weaker than it is now because that would be a sign of everything working. If the dollar was weak and there was a high demand for energy, which I think there's a reasonable demand for energy now, but you would have a much smoother plane, if you will. USD and OK should be heading down. Dollar should be weak if everything was right as rain, right? And then in that case, demand for energy should be high, and okay, and that would be better, but I know that that doesn't exist right now. So I don't want to look at it if I know it doesn't exist. Yeah. Cool. Well, that was great. I'll be here tomorrow. We'll put some more water under the bridge and see how some of these turn. Remember, it's a shorter week, and we've got lots of news this week. So, you know, who knows what happens? I think next week's going to be some even better trading. I think next week's going to be some good trading. But anyways, we're here every single day. Thank you for being on my team. I appreciate it. I really do. Please give a like and subscribe. That's important. If you subscribe, you'll be notified tomorrow when I hit the button and say start. You'll be brought directly to the webinar if you click whatever. So thank you for being a client to Traders Way. These are people that care about you. And remember, a broker isn't just like a big machine somewhere. It's an organization of people. And these people care about you. And you have to ask yourself, is that what you want in a business partner? Because that's how I look at it. I'm a businessman, right? And that's how I look at the relationship between a broker and a trader. I always have. I used to trade so much at GFT that I had my own dealing desk. So when you're at that level, your broker truly is your business partner, and you should choose your broker wisely. So I say when this is an organization of people that care about you, maybe that's important in your selection process for business partners. So peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Cheers.